All right, dear investors. Today I want to show you very interesting single page web application. It's called Stock Analysis. It is ideal for someone who wants to choose a stock. Let's say you're deciding whether to buy Nvidia or AMD shares and you don't know exactly what to look for and what are the most important things when it comes to equity valuation, company analysis, and choosing among the best undervalued stock to buy now. And this tool comes in handy and it will help you find amazing stocks. Simply input your stock ticker. Let's say we are analyzing Nvidia shares. The ticker is NVDA. And then input your FMP API key, financial modeling prep API key. They provide great market coverage, they provide amazing data, and you need the premium key to use this simple app. And once you obtain the API key by pressing Get FMP API key, you can hit the Analyze button. Let's see what the app shows after we press the Analyze button. It is fetching the data, it will take some time. So basically you see the NVIDIA snapshot, company overview, current price, the market capitalization, the industry. Then you see the most important, the most recent earnings, I should say. At the last reporting season, the company beat its EPS, which is earnings per share in revenue, which is a good sign. And you can see two previous quarter earnings as well. And based on that view, so to say, you can conclude that the company has the great history of beating estimates and shows great earnings surprise as well as revenue surprise. That means that to the next reporting quarter, there is a high probability that the company will show earnings better than analysts estimate, and this can result in the share price upside. As you can see, the estimate is 123 per share for the next quarter with the revenue of 54 billion. And the last quarter, the actual revenue was 46.74 billion against the expected 46.05 billion. So it was better and it showed great earnings surprise. Then you can see the analyst price targets. As you can see, there are different investment analysts, the brokerage companies that are calculating the stock target price. It is ranging from 19, the minimum, to 1,400, with the average price target among different investment analysts is 460.87. Now, what it can tell you, the higher the spread, the higher the future volatility. So in case of Nvidia, we have a lot of prices, and the price ranges from 90 to 1,400. That tells that analysts don't have like a common, of course they don't have a common opinion, because the DCF estimates, assumptions, so to say, they vary from analyst to analyst. But when you see such a wide range, it means that the stock can be very volatile in the future, so that you should adjust your trading strategy accordingly. Then you see the insider trading. As you can see, more insiders, the company insiders, they sold the share in the past quarters. Only, as you can see, in the first half to 25, there were buyers that are exceeded sellers. But overall, if you see through the 2024 and 2025, up to the recent insider trading reporting, you see that more insiders were selling the stock. Maybe they're fixing their profit, maybe they are expecting future higher volatility, maybe they are expecting company to show earnings or revenue in line with analyst estimates, maybe even worse. That's why they're selling the share. So be very accurate by tracking the insider trading. You can see what are insiders, the people who are working in the company, the executives are thinking about the company. So this is also very valuable. Then we have a price to earnings valuation, price to earnings ratio versus the sector price to earnings. This is a technology sector, and this app compares NVIDIA's price to earnings, which is 50.8, to the sector average, which is 58.6. So this is almost in line, but slightly below sector average. And the app tells that it is potentially overvalued based on the price to earnings ratio. But of course, when it comes to valuation, don't rely solely on price to earnings because it's tricky. If the company is very volatile, then the price to earnings ratio will be also volatile. Use other ratios like price to sales ratio. Examine company's capital efficiency like WACC by comparing the ROIC, return on invested capital, to weighted average cost of capital and so forth. And we also have the price target based on DCF valuation, but we will go there slightly later. As you can see, there is a next section, but I will go through this section later. Then we have the peer comparison. So for example, these are the closest NVIDIA peers. If you are not sure whether to buy NVIDIA or AMD, you can go through the same analysis for AMD shares. Just simply hit on AMD and it will show you the same dashboard for AMD shares. But we will proceed with this a little bit later on this video. Then we have a revenue segmentation. As you can see, NVIDIA relies heavily on data centers. It constitutes 88.3% of their total revenue. This is very important graph, revenue segmentation. It shows the dependency. As you can see, the NVIDIA is highly dependent on the data centers. That's why if in news you see some negative news related to data centers, you know what to expect from the share price. And talking about the news, these are recent stock news. These are recent company news. By clicking on the news, you go to the company webpage, to the publisher webpage, where you can read in more detail what analysts are thinking about the stock, recent things that are happening around this company, and so forth. Then we have a financial statements growth. Basically, you see that the NVIDIA showed the great free cash flow growth of 125% for 2025 so far. And the higher the free cash flow, the higher the potential price target, because free cash flow analysts use discounted cash flow model when assigning the stock target price. And that's why if you see a great free cash flow and it's growing from year to year, that's a great sign. You can see on 2024, it had 609% growth on free cash flow. 23 was not very successful year for the stock with declining operating income, earnings per share, free cash flow. But as you can see, then 2001, 2002, you have a great rise in earnings per share and free cash flow and revenue. And 2024 was the best year, and you can compare it with a stock quote. And also you can compare these financial statements growth with the closest peers. We will be doing that a little bit later in this video. And you can also see that the company managed to reduce its debt on 7%. They are reducing their debt reliance. That's a good sign. As you can see, the company showed the great rise in net income and the operating cash flow. That means that the company is generating great cash from its main business. And then you have a DCF valuation, discounted cash flow. This is the stock target price calculated using the DCF model, that is a discounted cash flow model. The difference from here is that these are the price targets calculated by different investment analysts. There are a lot of analysts taking part in this calculation. But here you see a DCF, discounted cash flow. This is a stock target price calculation based on DCF model. The app calculates it itself based on the discounted cash flow. And you can see the current price is 177. And based on the calculation, the shares have a 22% decline potential, which is overvalued because the fair value or stock target price based on the DCF model is only 137, but the current price is 177. The stock is trading higher. Now for the shorter term traders, if you are considering buying this share right now, this can be your take profit and this can be your stop loss. The app calculates it based on the standard deviation. It adds three standard deviations to the current price to calculate the take profit and deducts 2 standard deviations from the current price to calculate the stop loss. So this is very straightforward and simple. You can also download the report and it will be downloaded in the PDF format. Now let's see the AMD closest competitor. Let's say you're undecisive and want to know whether it's worth buying NVIDIA shares or AMD shares. Simply hit AMD and you can see the same dashboard but for AMD shares. Please don't forget to input your custom API key over here, and once you input your premium API key, hit the analyze button and you can see the result. As you can see, NVIDIA reported in line in 2 previous quarters. That means that the next quarter it can report in line. There is a high probability for that, but it can also beat the estimates. If it beats estimates, it can result even in higher share price growth, because less analysts are expecting that it will report better. Now you can see the price targets, also high range with a minimum price of 65 and a maximum 345, which implies higher volatility in the future as well. But looking at insider trading, they're almost equals buys and sells. That means that company insiders are not that pessimistic in comparison to NVIDIA shares. We saw that there were more sellers through 2024 and 25, which means that they are more pessimistic. But with AMD shares, you can't really tell that because insiders are buying and selling almost equally here. And based on the price to earnings, as you can see, the company P/E is 95 and the sector is 58, which means that the company is overvalued a bit. And we can go and see based on the DCF, it implies 61% downside, and the stock is overvalued because the app calculated it as 61.27, but the current share price is 158, which means that the share is overvalued or trading higher than its fair value. Then if you're deciding to buy it right now, the take profit is 173 and the stop loss is 143. Again, you can compare it to the NVIDIA shares. As you can see, they decreased the depth even higher, even more than NVIDIA. But their free cash flow, if we examine their free cash flow, it's not that great as in comparison with NVIDIA. And that can result in price declines, target price declines, or analysts putting more conservative price target for AMD shares. And as you can see, based on the revenue segmentation, NVIDIA is not that it has better diversification, so to say, and data centers constitute only 48% of their profits, where with NVIDIA it was 88% as we saw. Also, you can read the most recent news. And based on this comparison, NVIDIA looks more attractive than AMD shares, although insiders are not that pessimistic. And there is a high probability that the company will show report which is in line with analyst estimates, which can result in a flat share price to the next reporting season. And the stock is overvalued currently, and based on financials, NVIDIA is certainly much better right now because it generates higher revenue, it manages costs better, and it has higher free cash flow growth rate. As you can see, in 21 it was 340, which is good, but if we see 22 it was negative, and 23 it was also negative growth rate, and in 24 it was 114. So based on that analysis, you can choose the best stock to buy right now, and you can go through these peers one by one. You can simply hit over here INTC, it will start analyzing your share, or you can input the stock ticker in here after inputting your custom API key, and it will show you the analysis, and based on this analysis you can make your own conclusions and choose the best share to buy right now. So thank you for watching this video. I'll put the link to this application to the description, and have a happy trading. Bye bye.